So people are asking what types of life insurance. They're permanent life insurance. There's different types of permanent life insurance that we can use for this. But what we try to do is we look at each person's situation. We find the right vehicle for that person. So I'm gonna do this, and I'm gonna answer some quick questions before we wrap up here. So this is somebody who's putting, these are just arbitrary numbers, which means I'm putting these numbers just as examples so you can see. So this is somebody who's putting in $1,000 a month away, and they're building their capital using that. I'm going to put $1,000 a month away, and I'm going to use it. You can use that. You can use this money inside of your policy for reserves. You can use this to pay off debts as you build up your capital. You can use it for many, many different things, right? So now in here, we'll look at this where it says current illustrated values. So if we're earning, we don't have to earn astronomical returns. But let's say we're earning a little over 5% on average, which is greater than what you'd earn sitting at the bank. So one, I can earn a higher interest rate than a bank. I can get life insurance, which would pay my family from day one. If anything happens to me, I get a life insurance policy. But we're using this policy more designed for its banking function, not necessarily because of the amount of life insurance we want to have on it. So we design a policy in a way to maximize the cash side of it, not necessarily trying to maximize the life insurance side. So if we do this, let's say somebody funded $1,000 a month, and it did this starting at age 35, and it did this till age 70. At age 70, the policy would have accumulated $1.3 million of cash in the policy. Okay, so let's say I wanted to use it before age 70 because I want to be using my money along the way as my own bank. How do I use that? So some policies you can use within the first year. Sometimes it's after year one. But in the first year, after the first year in this scenario, I've put $12,000 in there. I could turn around and take a loan of close to $11,000 against my policy. They give me a loan against the policy. Now, here's the thing about life insurance loans. With the life insurance loans, there's no credit checks, so it doesn't show up on my credit report. So if I took a loan against my policy and I paid down my debts that do show up on my credit report, it will actually help to improve my credit score because it will bring down my credit utilization on those types of debt. So let's say I have money in my life insurance policy, but I also have credit card debt. I can leverage my life insurance policy, pay down a credit card debt while my money still continues to compound inside of the policy, which will actually help to improve my credit score because it will reduce my credit utilization rate, how much credit I'm using. So you can use that to pay down those types of debt. But let's say I want to use it to buy an asset. I can go and take a loan. So let's say year 10, I've got almost $140,000 built up inside of the policy. And let's say I want to do a real estate deal. I can go and take a loan against my policy, take a $100,000 loan against my policy, and I will still be earning interest off of this $139,000. So even though I received $100,000, I take that $100,000, I put it into a real estate deal. I use that real estate deal will pay me cash flow, and my money will continue to compound in the policy. And then when I die, my policy still has a death benefit that will pay tax-free to my family, and we still own the real estate. And the real estate will continue to pay cash flow. So I get a loan against my policy, which doesn't involve any taxes, and the loan's guaranteed, which means I can go get a loan whenever I want. It's not based on my income. It's not based on if I have a job or not. It's simply based on do I have capital inside of my bank, my policy that I'm leveraging as my own bank.